Something unusual is happening in the crypto market right now. While most investors are glued to Bitcoin and Ethereum, watching every small move and every tiny fluctuation, a different story may be quietly unfolding behind the scenes. Bitcoin has been moving sideways. Ethereum has been consolidating. Market momentum seems temporarily paused. But beneath that calm surface, one altcoin may be preparing for something much bigger. And that altcoin is Solana. At first glance, nothing about the current market structure appears dramatic. Prices are not exploding higher, headlines are not screaming about massive rallies, and the broader crypto market seems to be waiting for its next direction. But if you look deeper into the data, into institutional flows, technical structures, and accumulation patterns, you begin to see signals that suggest something important may be building. Because historically, some of the biggest moves in crypto markets begin quietly. They start during consolidation phases. They start when most investors lose interest. They start when attention is focused somewhere else. And right now, while Bitcoin and Ethereum remain the center of attention, Solana may be entering exactly that kind of phase. A phase where accumulation happens silently. A phase where institutional capital slowly positions itself. And a phase that could eventually lead to a major breakout. To understand what might be happening next, we first need to step back and look at the current state of the broader crypto market. After a strong rally earlier in the year, both Bitcoin and Ethereum have entered what analysts call a consolidation phase. This is a normal part of market cycles. Markets rarely move in straight lines. After strong upward momentum, prices typically pause, stabilize, and form new support levels before the next move begins. Bitcoin, which remains the dominant asset in the crypto ecosystem, has been trading within a tight range for weeks. Buyers continue to defend key support levels, while sellers appear near resistance zones. This tug-of-war between bulls and bears often creates sideways movement that can last days or even months. Ethereum has shown a similar pattern. After its own rally, Ethereum has been consolidating as well, forming a structure that suggests the market is waiting for a new catalyst. During these types of market environments, attention often remains focused on the largest assets. But historically, consolidation periods in Bitcoin and Ethereum often create opportunities for altcoins. When the two largest cryptocurrencies pause, capital sometimes rotates into alternative projects. And that is where Solana begins to stand out. Unlike many altcoins that have struggled to maintain momentum, Solana has been showing signs of resilience. Despite periods of volatility across the broader crypto market, Solana's price structure has remained relatively strong. Even more interesting is what has been happening behind the scenes with institutional capital. One of the most important signals in modern crypto markets is institutional demand. Unlike retail investors, institutions typically operate with longer investment horizons and deeper research. When institutional capital begins flowing consistently into a particular asset, it often signals growing confidence in that asset's long-term potential. Recent data suggests that this may be happening with Solana. Cumulative inflows into Solana-related investment products have been steadily increasing. Since late October, those inflows have accelerated significantly. The total has now climbed to approximately $1.45 billion. For many analysts, that number represents more than just a statistic. It represents a shift in perception. Institutional investors rarely move large amounts of capital without extensive analysis. They evaluate technological fundamentals, network growth, liquidity conditions, and long-term adoption potential before making allocations. The steady rise in Solana ETF inflows suggests that large investors may see something valuable in the network's future. These flows also play an important role in market dynamics.
When institutional funds allocate capital into exchange-traded products or similar investment vehicles, that demand often translates into buying pressure in the underlying asset. Over time, consistent inflows can absorb available supply and create stronger price support levels. This process does not usually create immediate explosive rallies. Instead, it often creates gradual accumulation phases, and those phases can sometimes last weeks or months before the market eventually breaks higher. What makes this situation even more interesting is the context surrounding Solana's price performance. Despite strong institutional inflows, Solana has experienced significant volatility over the past year. At certain points, the price declined more than 50% after major market events. For some investors, such corrections might signal weakness, but for others, especially long-term institutional investors, corrections can represent opportunity. When prices decline while fundamentals remain strong, large investors often begin accumulating. This behavior is sometimes referred to as smart money positioning. Smart money typically enters markets during periods of uncertainty, when prices are lower and sentiment is cautious. Retail investors, by contrast, often enter later during periods of excitement and rapid price growth. If the current institutional inflow data is any indication, Solana may be experiencing exactly that kind of smart money accumulation phase. But institutional flows are only part of the story. Technical analysis provides another layer of insight into what may be happening. From a technical perspective, Solana's price structure has been forming what many analysts describe as a bullish setup. The price has been trading within a tightening range, gradually compressing between support and resistance levels. This type of structure often indicates that a large move may eventually occur.
When price is compressed within narrow ranges, volatility typically decreases. But historically, periods of low volatility are often followed by significant expansions. In simple terms, markets cannot stay compressed forever. Eventually, the pressure builds to a point where the price breaks out of the range and begins trending strongly in one direction. In Solana's case, the current consolidation zone appears to be roughly between $82 and $90. Support levels have been forming near the lower boundary of that range. Meanwhile, resistance levels remain close to the upper boundary. Each time the price dips towards support, buyers have stepped in. Each time the price approaches resistance, sellers appear. But something subtle has been happening during these interactions. Buyers appear to be stepping in at slightly higher levels over time. This pattern is sometimes referred to as higher lows. Higher lows suggest that demand may be gradually increasing. Instead of waiting for large corrections, buyers are becoming willing to purchase the asset earlier during each pullback. At the same time, the resistance zone continues to act as a barrier. This combination creates a tightening pattern that technical analysts often monitor closely. Momentum indicators provide additional clues. The Relative Strength Index, commonly known as RSI, has been gradually rising. More importantly, it has been forming higher highs and higher lows on shorter time frames. This pattern often signals improving market momentum. It suggests that selling pressure may be weakening while buying interest slowly increases. Another indicator, known as the Directional Movement Index, or DMI, has also shown a bullish crossover. In technical analysis, crossovers in directional indicators sometimes signal shifts in market sentiment. When the bullish line crosses above the bearish line, it can indicate that buyers are beginning to gain control. None of these signals guarantee an immediate breakout. Markets are complex, and no single indicator can predict the future with certainty. But when multiple signals align, institutional inflows, tightening price structures, improving momentum indicators, analysts begin paying closer attention. Because historically, major market moves often occur when several different factors point in the same direction. The key question now becomes simple: what happens next? For Solana, The next phase will likely depend on how the price interacts with several critical levels. The most immediate resistance zone appears to be around $92. If Solana manages to break above that level with strong volume, the next target could appear near $96. Beyond that level, the psychologically important $100 threshold comes into view. Psychological levels often matter in financial markets. Round numbers tend to attract attention from both traders and long-term investors. Breaking above such levels can sometimes trigger new waves of momentum. On the other hand, markets rarely move in perfect straight lines. There are always risks. If Solana fails to maintain support near the lower boundary of its range, particularly around $82, the bullish structure could weaken. In that scenario, the price might revisit deeper support zones. One such zone sits near $65, where previous demand has appeared in the past. This is why analysts always emphasize the importance of risk management. Even when market structures appear bullish, unexpected events can change market dynamics quickly. Macroeconomic developments, regulatory news, or shifts in global liquidity can all influence crypto markets. But despite those risks, the broader picture surrounding Solana continues to attract attention. The network itself remains one of the most active ecosystems in the crypto space. Developers continue building applications on the platform. Decentralized finance protocols, NFT marketplaces, and blockchain gaming projects have all expanded within the Solana ecosystem. Network activity metrics also show signs of growth. Transaction throughput remains among the highest in the industry, and the network's ability to process large numbers of transactions quickly has positioned it as a competitor to other major smart contract platforms. These technological factors matter because long-term value in crypto networks is often driven by utility. When developers build applications, users interact with those applications, and transaction volume increases. That activity can strengthen the underlying network and attract further investment. Institutional investors often evaluate these fundamentals carefully. They examine developer growth, ecosystem expansion, and network performance metrics when assessing long-term potential. If those metrics continue improving, institutional demand may continue growing as well. And when institutional demand aligns with favorable technical structures, markets sometimes experience powerful trends. However, timing remains one of the most difficult aspects of market analysis. Even if a bullish setup exists, it may take time before the breakout actually occurs. Consolidation phases can last longer than many investors expect. During these periods, patience often becomes one of the most valuable strategies. For traders, consolidation provides opportunities to study the market structure carefully. For long-term investors, it provides time to evaluate fundamentals without the emotional pressure of rapidly moving prices. For institutions, it provides time to build positions gradually without dramatically impacting the market. And sometimes, these quiet phases become the foundation for the next major move. Because in crypto markets, the most explosive rallies often begin when the least number of people are paying attention. By the time headlines begin reporting massive price surges, the early positioning has already happened. Right now, Solana may be entering one of those early positioning phases. Institutional inflows are rising, technical structures are tightening, momentum indicators are improving. None of these factors guarantee a breakout, but together, they create a scenario that analysts cannot ignore. The coming weeks may prove crucial. If Solana manages to break above key resistance levels while institutional demand continues building, the next phase of the market cycle could begin. And if that happens, the quiet consolidation phase we are seeing today may eventually be remembered as the moment when the foundation for the next rally was formed. For now, the market continues to wait. Bitcoin remains in consolidation, Ethereum continues moving sideways, and Solana quietly builds its structure beneath the surface. Whether that structure leads to a breakout toward new highs or another period of volatility remains uncertain. But one thing is clear:
The next major move in the crypto market may already be in preparation. And for investors watching closely, the signals emerging around Solana may be among the most important developments in the market right now.